Ever wonder if your hard-earned savings are truly safe? Let's embark on a journey to understand the concept of financial security. Picture it as a fortress, safeguarding your wealth from the storms of economic instability. One such storm is inflation, a term that is often misunderstood. Many envision inflation as a distant specter, a shadowy figure that only affects those with extravagant riches. But this is far from reality. In fact, inflation is like an unseen tax, subtly eroding the purchasing power of your money. It's a constant, quiet menace that can slowly but surely whittle down your savings. Some people believe that merely saving money in a bank account is enough to keep it safe. However, they overlook the fact that inflation can actually reduce the real value of these savings over time. So, what exactly is inflation and how does it really impact your savings? Stay tuned as we unravel this economic enigma in our next scene. Inflation is like a stealthy thief, slowly eroding the value of your money over time. Essentially, inflation is the rate at which the general level of prices for goods and services is rising, and subsequently, purchasing power is falling. Think of it like this. Suppose you could buy a loaf of bread for $1 today. If inflation rises by 2%, next year that same loaf will cost you $1.02. This might not seem like a big deal. After all, what's 2 cents? But when you apply this to larger purchases like cars or houses, then it starts to add up. And over time, it can significantly decrease the value of your savings. Moreover, if your income isn't increasing at the same rate as inflation, then you're effectively earning less each year, even if your salary stays the same. By now, you might be wondering, how can you protect your wealth from this silent wealth killer? Fear not, there are strategies to navigate through the fog of inflation. First and foremost, an effective strategy is to invest in assets that typically increase in value over time. This includes stocks, real estate, and precious metals. Let's break them down. Stocks represent ownership in a company and can grow in value as the company becomes more profitable. While they can be volatile historically, stocks have provided a return that outpaces inflation. Real estate, on the other hand, is a tangible asset that tends to increase in value over the long term. As the cost of living rises, so does the value of property and the rent you can charge as a property owner. Then, we have precious metals like gold and silver. These have been used as a store of value for thousands of years and can act as a hedge against inflation. When paper money loses value, metals often rise. Next, let's talk about diversification. This is the practice of spreading your investments across different types of assets to reduce risk. If one investment performs poorly, you have others that may do well. It's like not putting all your eggs in one basket. Moreover, maintaining an emergency fund is crucial. This is a stash of money set aside to cover the financial surprises life throws your way. It provides a financial safety net and can help you avoid dipping into your investments when unexpected expenses arise. Finally, keep a close eye on the economy. Stay informed about economic trends and indicators. Understanding the economic landscape can help you make smarter investment decisions and adjust your strategy as needed. Remember, the best defense is a good offense. Investing wisely, diversifying your portfolio, maintaining an emergency fund, and staying informed are all powerful strategies to safeguard your wealth against inflation. So prepare, don't despair. Let's quickly recap what we've learned today. Financial security is not just about accumulating wealth, but also about preserving its value. Inflation, often dubbed as the silent thief, can erode the purchasing power of your money over time. It's a reality that we all must face and navigate through. We've explored various strategies to safeguard your wealth against inflation, whether it's investing in real assets like gold or diversifying your portfolio with inflation-protected securities. The key is to stay proactive. Remember, these strategies aren't one-size-fits-all solutions. They require careful consideration and, in many cases, professional advice. The importance of financial literacy cannot be overstated. It's your armor in the battlefield of finance. Staying informed about economic trends and understanding how they can impact your wealth is crucial. And with that, you're now better equipped to protect your wealth from the silent thief that is inflation. Stay savvy, stay secure.